Welcome to this week's version of Nichols and Dimes, our weekly video series. The quote of the week this week comes from the late great artist Pablo Picasso, who talked about taking action. He said, "Action is the foundational key to all success." Action is the foundational key to all success. Now, why am I bringing this up today? Well, I'm talking about action specifically as it relates to inflation. Now, inflation and the rate of inflation and the cost of goods increasing have been in the news for some time. So it's not new information that costs of goods have gone up. Of course, we feel it in our pocketbooks when we buy products. We see certain expenses going up. You see it in the news, not new information. So one of the questions I have for you today is, yes, well, given the increase in labor costs and product costs, given the increasing rate of inflation, are you taking action on your portfolio to offset that expense, to offset the expense of inflation? So the Bureau of Labor Statistics recently shared that compared to a year ago, food prices are up 12.7%, outpacing the overall increase of 8.3% in the producer price index. So the overall cost of foods over the last 12 months has increased 12.7%. Okay, that is dramatic. And if you are not taking action to offset the cost of inflation, I think you're making a big problem. If you're not taking action, again, listen to Pablo Picasso's quote, you must take action in order to yield tangible, actionable results. So if you are in traditional investments like bonds, for example, where you're earning 1, 2, 3, even maybe at best 4%, if you're looking at the inflation eating away at your return, plus other expenses like fees, if you're in a mutual fund, if you're paying your advisor, if you're in investments like bonds, after you pay your advisor and after you pay taxes as an example, even if they're in munis where they're tax-free, if the cost of goods are growing up, you're actually losing money. Your net purchasing power is negatively affected. So you may be in bonds for a short period of time where you're not going to feel it, but if you keep, as an example, money in bonds over a long period of time, if inflation continues to rear its ugly head, you will lose money in terms of purchasing power. It's almost guaranteed. So you may say, well, Chris, what can I do to keep my money safe? That's why I have my money in bonds. What can I also do to generate a reasonable return to offset inflation so that the purchasing power of my money doesn't get harmed? Well, there are alternative investments. Now, on a recent video, I talked about the endowment model. The endowment model, you may or may not have seen that video, is an investment portfolio that many large educational institutions like Harvard and Yale have implemented. And you may recall from a video I did recently that these institutions, particularly Harvard, only have, for example, about a 4% allocation to bonds. They have most of their investments in non-traditional investments like private equity and private debt. So again, my question to you is, are you looking outside the box to generate a reasonable return to offset fees, taxes, and again, inflation costs so that you can earn a real net positive rate of return? Because again, over a long period of time, if you're not offsetting the cost of rising products, the cost of rising goods, you're actually losing money in terms of purchasing power. So again, I'd encourage you to take action to look for alternative investments outside the traditional stock and bond investment portfolio, which I know, again, most folks traditionally invest in. To that end, if you would like a second opinion on your portfolio, to look into alternative investments, for example, the endowment model like Harvard and Yale implement, you could send me an email at cnichols@nicholswealth.com, or you can go on our website at nicholswealth.com to learn more about what we do as fiduciary advisors. Thanks again for watching, again, and take action to offset long-term inflation. Thanks for watching. Bye-bye.